Hey everyone, Lillian here. Welcome to my channel. This channel is about Canadians who can learn how to save, protect, and grow your money. So you just bought a house, or it's time for you to remortgage, or just changing to a different institution. So you're thinking about mortgage insurance, if that's the right choice for you, or you have already signed on the dotted line and wasn't sure if you made the right decision. If that's you, dig in because we're going to tell you 5 reasons you should not get the mortgage insurance. So first, let's talk about the ownership and control. So mortgage insurance, in a nutshell, it's a debt insurance. What that means is that the insurance is covering the debt, which is the mortgage in this case. So when there is a claim, the benefit will pay to the bank, which is the lender, instead of you. So your mortgage payment will be paid off with the mortgage insurance. So the question would be, what if I do not want to pay off the mortgage? What if I want to use that money for something else and just keep the payment? Well, if you are having the mortgage insurance, you don't get to choose because the bank is the beneficiary instead of your family. So that's the first reason you should not get mortgage insurance, because it does not protect you and your family, it protects the bank. So number 2 reason is underwriting. So underwriting is a term that we use, which means that the insurance company would decide if they will cover you or not. So that's a process so that they will qualify you and see if you fulfill all of those requirements. And for mortgage insurance, the underwriting process, we call it post-claim underwriting. What that means is that when you sign for the document, you already start the premium payment, but the underwriting process didn't happen then. What happens is, like, when you start a claim, then they will start the underwriting process to see if you are qualified for the insurance, which might be 10 years or 20 years down the road. And by the time that they will ask you for the medical information, all the details that they need, if there's anything in there they found which is not matched with the insurance, they can say it's non-disclosure or it's mispresentation, then your insurance claim will be denied. So I think personally, this is one of the biggest reasons I think mortgage insurance is not the best choice, because we want insurance to give us a peace of mind. And by the end of the day, if it's not, why do we get this at the first place? So number 3 reason is the portability of the mortgage insurance. What do I mean by that? So our mortgage, usually it will last for 25 years of that amortization period, and within that, every 5 years, and we renew our mortgage, right? So if you have a mortgage with, say, one bank, and then you decided to move to another bank because they have a better deal, or you just bank with them, or if you decide to refinance or even remortgage, and those are the times that your mortgage insurance, so those are the times when your mortgage insurance will have to terminate, then you have to re-qualify for a new mortgage insurance based on your situation at that time. So your age will change, which will change the premium, and maybe your health condition change, so that there is a possibility that you do not qualify or you have to pay more for the same coverage. So this creates a lot of uncertainty compared to just a regular term insurance policy. The premium will stay the same for the term, and it's not going to fluctuate, and they will not ask you questions within the term. So mortgage insurance in general has way short terms compared to the term insurance policy. So number 4 reason you should not get mortgage insurance is the decreased coverage. As we all know, our mortgage, we pay it off month by month. So it shrinks over time, but your premium stays the same during that time while you are getting covered a lot less. So that's another reason. So if you do choose a term life insurance, if you choose a 20 years, within that 20 years, the coverage doesn't change, the premium doesn't change, no matter how your mortgage go, and it doesn't matter where you move your mortgage to. Now, all of these move us to number 5 reason why mortgage insurance is not a good choice. All of these bring us to point number 5, why mortgage insurance is not a good choice, is the cost. So let's say that Jim is 25 years old. He just got a house and the mortgage on the house is $300,000. If he got a mortgage insurance from the bank, it's not too bad. It's about $35 per month. That's okay. So when he's 25, as he pay down his debt, so let's say fast forward 20 years later, Jim is 45 and his premium will increase into $96 for the same $300,000 mortgage. But you might say, yeah, my mortgage does pay down, so it shouldn't be that high. You're right. So let's say Jim paid down $200,000 of mortgage. So let's say he only have $100,000 of mortgage. And because he's 45, he's a lot older, and the premium for that $100,000 is $32. So it's still, well, it's a little bit less than $39, but at the same time, you get covered 1/3. You get covered a lot less. While with a term life insurance policy, if Jim signed up a term life insurance policy for $300,000 when he's 25, for 20 years, the premium will stay at around $20 for that coverage until he turns 45. So that's a big difference, right? Also, there is less uncertainty. So it doesn't matter if you change mortgage, it doesn't matter if you refinance, or the benefit will pay to your family and they get to choose what to do with that money. So I hope by now you understand why not having mortgage insurance. I hope by now you know why we don't want to get mortgage insurance. We can just get a term life insurance. Let's recap. So reason 1 is you don't have the control and ownership. Number 2 is the underwriting is at claim, not at the time that you enter into the contract. Number 3 is the portability. So it's less flexible if you want to change it to a different institution or if you want to refinance your mortgage. Number 4 is the decreased coverage. As you pay down your debt, as you pay down your mortgage, your premium doesn't change, but you get covered less. So it's shrinking. Number 5 is the cost. It's a lot more expensive than just the regular term life insurance policy. So what's the next step? If you already have a mortgage insurance, do make sure you comb through the contract to make sure that you are fully covered under that contract. So if you don't have mortgage insurance or you want to replace it, I highly recommend you find a professional financial specialist who will do the needs analysis for you so that you can get appropriate coverage. I hope today's topic do help you to make an informed decision. So while you're waiting for the next video, find me on social media where I share many tips on how to save, protect, and grow your money. Please subscribe, share, and like my channel. If you have any questions or any topic that you want me to uncover, please comment below and let me know. Thanks for watching today's video. I'll see you next time.